Hey guys, DJ from PTA giving you guys an update. Been a pretty hectic week for me. I haven't really been trading. I traded on the 7th. Today's the 9th. Want to kind of go over the 7th trade, put this video out there so you guys can kind of take a look at it and let me know what you think. But the trade I'm going to discuss is JAN. I was going to do a video on AERC on this one as well, but I decided after thinking about it, I want to do a complete breakdown because it was actually a 2-day move, and I want to kind of explain that full process of how it ran. And I mean, literally, AERC ran and did a very nice move. So back up to 15. So I want to go over Jan to kind of explain that trade, especially with coming into today being the 9th. To kind of explain why it's propping up pre-market and to give you some consensus on it and kind of give you an idea. So initially, the trade on the 7th, we had some, subpar news or whatever the case may be. And we had a couple of circuit breakers that happened that day. So it was kind of one of those moves where everybody was kind of looking at it to see what it was going to do. So let's break this down. I'm going to go to the hour first. So on the 7th, which was this day, we had this big ramp up in pre-market. And usually when we get this big ramp up in pre-market, what I do essentially is take a look at the trade from multiple angles. What I mean by that is I was trying to see if it actually was going to run. So breaking it down into the 5, what happened was that we get this quick ramp up. So when I saw this stair step like this and it was holding 355, okay, I end up entering the trade. Let me look at the monitor. Let's see something here. I end up in the trade at 367. So we had this quick pop. 367 was my entry, and what I saw was that you had a lot of shorts essentially being cleared out. And let me put it like this. So let me kind of zoom in on this portion here, give you a breakdown of that. So ultimately, we seen this breakdown here early in the morning, and I was watching key areas. So this was one, and then they started to kind of pull it back, and that's where I had drew my line right there. When I seen it, initially it was, if you look at this, you see that it was disrespecting the 355 area. So right here, right here, right here, and as well as right here was the based on this 5-minute, you can see that literally 5, 10, 15, 20, a good 20 minutes of just price action that kept going up, and this is where they were loading in. And then what they typically do is they fade it on one end and then kind of fade it again. So what it looks like to me is it kind of looked like this, almost like a channel. So you can kind of see where they're consolidating on the sideways, pushing the price down to later rip it higher. And then they did the same thing again for the move higher later. So it's like 1, 2, 3 stages of this happening. So I end up placing the trade at this price for that reason. Give me 1 second here. All right, great. So when I saw that, and let me go back to the thing. This is what you got to look at. There was rejection. Remember, this is the 355 area, and this is where it kept rejecting, and then it finally popped up, and then this candle was where it actually closed, and then they started to fade it back into this area. So when I saw this was getting rejected or whatnot, and what happened is it got pushed back and pulled down. After it got pushed back and pulled down, it started to respect this 355 area. So coming into the morning, when I saw the move, my thought process was, okay, it's trying to respect this area. Let's see what it's gonna do. So when it did this hyper move right here, I jumped in, knowing that I'm clearing out the pre-market shorts and all that. Once we got over it, it just kind of took off. I ended up getting a good, 40-50 cent. The range was like 67. So like my whole idea is, if you got a 10 or 12 cent risk and you can get a 50-60 cent gain, take that. That's a 10 to 5, that's a 5 to 1 move. So yeah, you don't have to necessarily get a full dollar, but if you see a nice capitalized move, I mean, that was easily 50 cent. It was easily a 50 cent move, 40 cent move. So for me, it was a good 50 cent move. And when it popped back up here is where I ended up getting out, because I seen that this wasn't sustainable, and then it eventually faded. So now what was interesting about it is it did exactly what I wanted to do way after the fact. So what happened is it, it held strong and it faded for pretty much the rest of the day. So when we look at the higher time frames, you can see that, it respected 355, respected, then it broke it, and then it started kind of respecting my entry price of 367. And then it broke down, and it's respected to 355. They're still accumulating shorts, and then they still kept it respected. So right around here is where it started to kind of change. Right here, once it respected here, so you had your support, this igniting candle. So if you look at it like, let's see something here, give you a different viewpoint. If you look at it like this, you had this bounce down, bounce, and that's what got shorts really interested. So when you see this, it bounced and then it fell all the way down, and then it bounced, and you can look at it and see that it kind of like bounced almost 50%. Just like it did right here, it bounced almost the key of it. You would have waited for the next candle to think that it was going to crack. It didn't. So it continued to bounce, which gave people the enticement that it's going to go higher. I didn't see a real volume bar increase in this. So ultimately, you knew it was going to keep going down. Also, you want to respect the higher time frames. So when you go to the higher time frame, like your 30-minute, your hour, you got to look at it and see that like it's still doing, lower highs as far as the closes, lower highs and lower lows. So it was still like not in play for long. So when we look at the chart, you can see that you had some type of pushback right here. And ultimately, when it pushed back, it actually created support right here. Now, why is that? Well, let's look at these candles. For the last 5 minutes or 15 minutes, it rejected this area. So when people say, well, what you mean by rejecting? Just look at the chart. So if we paying attention to the candles, we look here that this candle here, this candle here, and this candle here was all being rejected. You get what I'm saying? So you had your last bit of volume come in here off of this candle here on the short side. They started collectively gathering the position here, and then we got this pop, really with no volume on the other side. So you would have thought that it would have popped and continue to fade, but it popped and then held. And as you came back, you can see that it didn't, the price, and you really got to pay attention to the close price. And so I try to tell traders, like, look at where it closed. I know the wicks means something. That means that the price reached down there and people were trying to get in or whatnot, but you understand that someone's buying here. He closed above this area, this 330 area. It wicked down, got as low as 328, 328 twice, and then 328 three times. So it hit 328 for 15 minutes, and then it wicked out 327, one key, and then they exploded it. So when you see a support, and put this in perspective so you guys can understand. Now, when you see 3 candles, these are 5-minute candles, which equal out to a 15-minute candle. Okay, if you see this and then ultimately you get an igniting candle, that's a trend direction change. So what happens is, okay, someone's stepping in here on this candle. This was the key candle right here that changed the momentum of the move. You had 3 candles that act as support, okay, and then you had an igniting candle, and then afterwards you got the move. So ultimately, when you in a trade and you're looking at this stuff, this is why the 5-minute, 15 minutes, so on and so forth is so important in looking, because this is what the traders look at. So you had this drop, so you would have dropped your 330 line here, or this area. Remember, you want to look at hold numbers. You in here, it exit out right here, which was previous support. Now it's acting as resistance, right? So we had a rejection here, rejection there. Then we got this pullback. The pullback from 355 area came right back down to the 330 area, and they deliberately closed it higher, creating another level of support. So as it created another level of support, let me bring this chart up a little different. Let me see something here. Yep, like that. So when you have the 330, remember this 355 rejection came back, respected the 330 support from previous. This is where everybody got interested right there. Right when it started to come back, cross over the line. You get what I'm saying? This is where everybody got kind of interested at. So you probably a lot of entries from here. And now you're looking at only an 18-20 cent risk to the daily support. Like, this is a heavy support. It bounced, came up, respected it again. This is volume. This is upside. This is more volume in that candle of them coming in to buy and take it the other way than it had in this candle. This candle only had 222,000 volume. This one had 523,000 volume. So someone is very interested in this stock going the opposite way. And then boom, boom, you hit this candle here with 1.3 million in volume. And what happened? Went straight into a halt. Why? Because you hit so many stop losses along the way. You had stop losses here. You had stop losses here. You had stop losses here. Descending, volume accumulating, and then they ripped it higher straight back up to 5. So this was a great move here, which is what I was looking for in the morning, but didn't get. So still collected profit, but, you know, not being at the desk to take advantage of this when you knew that this was the overall trend because they wanted the stock to go higher is where shorts got anxious, went in here. And you got to think about this. They were in this trade for 1, 2, 3, 4 hours. So they accumulated 3.2 million, 2.9. So let's just do the math. So we got 3.2, 9, 2.9, 4.7, and 9.8. So you had like probably over 21 million worth in volume one way, and then it started holding, and then you got it ripped. Well, this is almost 12 million in volume going on the upside. So, you know, they just ripped the shorts out, ripped the shorts to shreds. So with it being a low float and then it had shares available and all that, people were waiting for this to come back down to here, which would have been a really good trade, but they ripped it. So it's something to think about when you're looking at the patterns. When you're looking at the chart, you have to go back and really look at what the chart is telling you, because it gives you signs as to, oh, I'm going this way, or I'm going up, or I'm going down. You can really pay attention to these key areas and trade off of the support, trade off of resistance, and understand and respect it. Now, we coming into today. If you take a look at this, you can see the same areas. So think about it. I said my entry was at 367. It actually rejected 355, which was previous support. Tried to get some support here. They broke it down, brung it back up. Remember, we said 330 was an area, which was, let me see something here. Let's go back. Okay, here we go. So right here, you see 355 was an area. It kept rejecting it. Then it came down here to 330 to respect it. Came back up. They came back. They tried to respect it. And 367 was my entry. But you see that they respected 355 a few times. But you also see that they're accumulating up here as well. So this became a zone 2. So then they went, came back, and when they started to respect this 355 area, they came back and tried to bring it back down again and respect it. And now it gapped up today. So now we got this big, because you got all these people, again, holding shorts from the previous day in this trade. So you had pretty much a whole day of downtrend, and then you had a quick pop and volume stepping in, going the opposite direction. And now that people, and think about time, and when people can actually get on the chart and place trades, depending on who a broker you have, a lot of people weren't able to get out of their trades or start placing their trades to after 8 o'clock. Now we got this massive 2.3 million worth in volume to try to clear these people out. So, you know, a pop up, maybe a pullback, you know, somewhere around, I'm guessing it kept rejecting this area here. So I'm expecting this. And this is just my thought. I'm just putting it out there now. I'm thinking somewhere around that 440 area is where it's critical. All right. So let's look at the higher time frames and see if it gives us a different story. So we're looking at this, and I'm saying to myself, there's a lot of shorts here. They got ripped. Short stepped in here. They pulled it back up. They broke it back down. And then they ripped it back up. So right now, the high of this candle is 488. High of that one is 5. And this one's 504. So if they can hold this, let's look at this. If they can hold this above 440, this has a great potential on going higher. So let's go back to the daily. Let's see something here. Let's go back to the daily. Yeah, so you looking at 462. You got 489, $5 area. So let's look back. This 440 got rejected here. And then we had a push away. It looked like it got rejected here. And then we had a push away. And then you act like it was support here. So guys, this stuff is always lining up. So if you don't know, you just go back to the higher time frame to look for suggestions. Just like this 355 we drew earlier. Rejected, and then break down. I always look at how it respected 330 and then it broke down. So these are all the key areas that you want to be in. Remember, 367 was my price that I got in at. But right here, it rejected the 355 and then pushed down, rejected 330 and then pushed away from it. So 330 is a critical area. You get what I'm saying? Right here is where 440, it rejected, bounced up, and then it broke down, came back, and respected it. So 440 needs to hold. 440 needs to hold for it to go higher. Once it go higher, we can look at about 505. And this is another key area right here. Why? Rejection. Then they pushed it down, came back into there, rejected, pushed it down. So as a result, That was where the actual trade went to. So these are the key areas coming in today. So let's look at $5. So I'm thinking a 440 hold, crush it past $5. Yeah, we might not get a move. You might be able to get to 6 or 7 easily, because there's really no hindrance right here. Now this area here was rejected, so that's 640s. And then you got a big rejection. So again, it holds 440, might go to 5. Once 5 is clear direction up to 640. Clear direction up to 640. So guys, take a look at that. Think about it. Look at those trades. I'm gonna put that all in the Discord, just so you guys can know. And then other than that, stay trading. Stay trading at it. Keep looking at these charts the way that I'm telling you, and it'll start making sense to you. All right, guys, I got to get off the desk now. I'm getting ready for the trading day. So I always tell everyone, stay studying and stay focused.